Okay, hello guys, welcome to another trade review. So today we're going to review this trade we done on 13th of November. Okay, so I started the whole session with a 50-50 outlook, so you can see why I typed, and I was looking at this 5-minute Venom, whether it wants to continue to trade higher or not, and it's a Venom above the 9th of September new week opening gap. So it fails to touch the midpoint of this new week opening gap, and it also fails to reach all these old first presented failure gap. So that is what I was going long based on. And you can see going down to a 3-minute chart, random can be refined right here, just above the new week opening gap. Yeah, and this candle right here fails to even touch back the 9th of September, the 9th of November new week opening gap. So that is very good expansion feedback right now. So right now just looking for a entry, just measuring my max 20 points, and right here, okay, it is right here is where I wanted to enter, but I hesitated because I have not been trading for quite some time. This is one of the flaws I encountered recently is because I have not been trading live fund for quite some time, makes me hesitate because I'm afraid of being wrong, when actually being wrong is something I've been doing all the time. And you can see I use the higher failure gap to enter, when actually this was the low risk entry, because first we have the first presented failure gap. Okay, looking back, this is not the first presented failure gap because it did not include this swing low. So this lower CB is the first presented failure gap for the morning session, because it includes, okay, it is the specific candle. This CB is the one that breaks this two swing low. So that is the bearish market structure shift with this first presented failure gap. So this one is not valid at all. So using this as an entry, that is part of my mistake, my error, dude. Because first I was already looking for a trade, and then because I hesitated right here, all these entries were actually sort of chasing price, and trading missed opportunities is something that I will not usually do. So this right here is a very good example of, just chasing price, because my model is right here. This is the model right here, because we already have the from the high time frame confluence, then it trades away from this new week opening gap. Then we have this 3-minute balance price range, which was refined from the 5-minute. When this is a breakaway gap, then we have a right here. This is the nice silver bullet trade, and because I missed this, then I was looking for this to enter, and because this was left open, I was using this as an entry, because I was looking at this small CB right here, when actually this is the nice entry. Why? Because this is the actual first resistance failure gap, because it is the candle that makes the bearish market structure shift. So this is the significant one, and then we have it act as a inversion failure gap right here. This whole thing is a balanced price range, because this wick right here, if you go down to a 15-second chart or 5-second chart, you can see that this is a balanced price range. This inversion failure gap is considered balanced already, and what we have here is discount sensitivity. So price traded into this BC, then into price trade up. And right now trading here is where I would take my lowest hanging fruit objective. So in terms of lower hanging fruit objective, this is the lowest already, and my entry is so damn close to my lowest hanging fruit objective, which is why I said that this is not my model. Because if we draw a leading range from here to here, you see equilibrium is here, and below equilibrium is discount, and that is where all my model entries is. So yep, then after it gets stopped out, you can see that I actually wanted to reverse because I felt like it wants to trade lower. And you can see that I close it immediately also because I was doubting again. And right here you can see that this reverse is where I was reversing. Okay, right here, and you can see I close it immediately because I just felt like maybe it's enough for today, just study. Although I know that because this fair gap right here already failed us, because this fair gap right here I use as a bullish entry, they failed us, so I know that it is likely to trade lower, retrace back to some kind of discount. And that is basically why I reversed, and because we rejected from the opening range gap low. Can't if it did not even have strength to push through the midpoint of the opening range gap. And then yep, you can see price started melted lower, and again I was thinking like, should have all this kind of should have, but actually I just told myself that I want to just study. So because if I had take this, if I had left that entry, and if it turned out to be a loss again, I sort of break my rules because my max risk is 1% really. So, and because I have not been trading long, I have not been trading for quite some time with live funds. So I just told myself it's enough for today already. And you can see that this is another consecutive entry for the silver bullet to trade to lower prices, because right now it fails to reach the opening range gap high. It fails to reach the opening range high, and it fails to reach the opening range gap lower quadrant also. So this to me is a very weak market. And looking at the higher time frames, it does looks like it wants to trade lower also. So you can see my reverse trade was very nice. It was a very good study. Okay, looking at this fair gap right now. Does it melt lower right now, leaving a swing high? Yes, we do. And then this act as an order block. Yeah, you can see the green candles are supporting price. And this candle right here, does it act as a reclaim CB? The prices push through. And there we have it. Very nicely. So this whole run right here is already 100 points. But I just treat like it's all these things repeats. And you see all these discount are being treated as premium and traded back into the new week opening gap. This whole run itself, is 140 points. Yep, so it was a pretty good study. You can see prices melt lower. Just looking at that balanced price range from 3 minutes, does it still want to hold price, act as an inversion? Yeah, definitely it does. And sensitivity of the new way opening gap right here, price touches the high, so does it want to trade to the midpoint of it? And yes, it does. It takes out the opening range high. It takes out the opening range low. Okay, so opening range high was failed to reach right here. Then it trades back to the opening range low, which is my low hanging fruit when I did the reversal. And you can see it turned out to be a very good trade. Yeah, so yeah, so this whole run right here is close to 200 points, and just one trade like that is very just one trade like that can just fix my drawdown. So yeah, to me, although I did not really executed on this, although I already closed the trade, but still it's a very fruitful study. As you can see how all the discount rates are being treated as premium, and see how the old first presenter fell get of this. Look how prices use it to trade lower. Even here, even here, everything was outlined before it took place. So to me, this right here ends the session for me. So yeah, this is it. This is the trade. And this lately these two trades made me realize that I'm starting to hesitate. So because of these two trades just make me more aware that right now if I'm a low risk entry, if manipulation is done, I know where price is going, I'll just enter. I'll just execute. There's nothing to doubt because the logic and time and price, everything is a green light for me to execute. I'll just execute and just let it go. Because my main job right here is not being right, it's managing risk. So right now that's what I'm doing. Taking a low risk entry is part of managing risk. Chasing price, trading on missed opportunities, trading close to where I would take my profit. I in that is not to say that it's not a good trade. It's just a trade that is out of my model. It's just a trade that I wouldn't be comfortable taking. That's why when I took it, you can see that actually I closed the trade manually also. Although it's quite speed up right here, you can see it's very see that I actually closed the trade before it hit my stop loss. Okay, you can see that I closed the trade and then I closed the trade and then I done a reversal and I closed the trade again because yeah, it is what it is. Because when I lost right here, because trade is not even one, it's like just 2 minutes. As soon as it reached the BC, I didn't know that I'm offside, so I closed the trade manually, and then I sell on market again because I know market is likely to trade lower. But then I just tell myself, I already reached the risk threshold. Okay, the threshold for today is already reached, so no doubt it was a very nice trade. Okay, very nice, very beautiful. And you can see after that, what I said after this is it ends my session because 11 is already reached. 11 o'clock is already reached. So right now I'm just trading back into the lunch macro, and that is completely out of the Q zone I want to operate in. And that's it for the trade review. So see you guys in the next one. Yeah, but I just want to highlight one thing. Trading is really all about managing risk and identifying and fixing. So once you fix all the flaws, it's easy to just operate in all these markets when everything is so one-sided. It's so aligned with what the algorithm suggests it does, and it just do like it's coded. So all this is a very this whole thing, no doubt it was a loss, but I can tell you one thing, that it's a very satisfying thing to see, to be able to read price right now. But I guess being right is no longer enough. Being right is no longer enough. So yeah. So it's just like that. Take low risk entry, don't doubt. Just take it. As you can see here, just want to highlight some stuff, right? This is a 5-minute chart, and you can see that yeah, price is actually kind of more towards the bearish side. And confirmation, we had confirmation. The confirmation was this opening range high wasn't taken, and then it rejected the opening range gap low. After this bearish market structure shift, what do we have here? Fair gap. Before it, here, a fair gap. So just yeah, we shall just wait for one day when the market condition is nice and I happen to be in the trade, then my drawdown will be mostly recovered, okay? Because right here, even if I had half, like reaching the low hanging fruit objective, which is 25319, and I see selling at here, that's like 100 points is almost half of my drawdown that I accumulated throughout the whole year. So to me, that's a pretty good trading. Even if I get half of it also, I can. Even if I get like 50 points, it's $100 already. That's a quarter of my whole year drawdown. So yeah, you guys get the gist, and I'll just keep on doing the right things. Yep, I'll be there in no time.